Hi guys, welcome to the Trade Genius pre-market hotspot, where we try and get ahead of the game and show you some key market factors before the week gets underway and following last week's very busy close. For those of you who don't remember, last week we saw some incredible weakness in the US dollar across the board, with all major pairs sort of flying sky high. Pound dollar, euro dollar, New Zealand dollar, and especially Aussie dollar, which was rather interesting given that relief that we had in the market when the US obviously voted to increase the debt ceiling just in the nick of time. And before the market opens this week, I actually wanted to show you all a bit of a broader term picture, looking at the market from a wider perspective and a longer term range, because it's rather incredible to see how almost every major pair is very much at a crucial price resistance level. And without further ado, this is going to present traders with the opportunity to enter into a sort of make or break position that we want to show you straight away. So let's look first at the Aussie dollar weekly, and we can see here very clearly, all the way back in 2010, just how many times this price round about 0.9665 level was actually tested. Again, a ridiculous amount of times, as we can see here in the blue circles, and now we can see actually right bang on that level. So really quite a crucial make or break point for the Aussie dollar, and you can see the range quite clearly here in the long term as well, from the two blue trend lines forming that channel. Moving forward to the euro dollar weekly, again these are all weekly charts, looking back from 2010, another crucial price level here around about 132. Okay, and then obviously that being hit very abruptly in January 2013 before taking a retracement down quite some way towards 128, and we are right back at that price level here, as you can see. Next up is the New Zealand dollar. Now, although this isn't a horizontal range, we do have a triangular shaped range here very distinctly on the weekly chart. Okay, as you can see from the top left here once, and then in the middle of the chart twice, and now bang on that blue line there, and again coming from the upside as well, down on the bottom left once, twice, 3, 4, 5 times here, around about sort of the 77 level, 0.77, and now of course at that very interesting make or break path here, round about the 85 level, 0.85. And last but not least, of course, let's look at this GBP. Very strong resistance levels showing here since 2012 especially. Okay, so we've got 1, 2, 3, and now for the fourth time coming towards that very significant 163 mark. Okay, and just a little bit below at this very moment in time. What will become of the pound? If you saw last week's episode, we actually looked at a longer term chart, not a weekly but even a monthly chart. In fact, you can see it here. We can see that there is again a triangular sort of pattern there, which we discussed in more detail last week. Do refer to that video if you want to get more information on that. So very much a sort of heads up ahead of the pound on the long term and obviously medium term charts. All of this is incredibly significant because you may have forgotten that the non-farm payrolls never actually took place at the beginning of the month due to the US government shutdown. We have them coming out this week amongst other very important announcements. So look out particularly for Tuesday and Wednesday. On Tuesday we have US non-farm payrolls. On Wednesday we have Australian CPI and UK bank rate votes. And later on in the night, New Zealand dollar trade balance figures, all very relevant for all of the charts we just discussed. So that's the market update for you guys, the pre-market hotspot. We hope you enjoyed it. We hope you're prepared for the week ahead. Enjoy what's left of the weekend, relax, and look forward to a busy week of trading ahead. Thanks a lot. Take care, guys.